Welcome students, greetings of the day. This is the fifth lecture in the series, and you would be happy to know that with this video lecture we will be finishing our unit 1. That is what I suggested you all to prepare this unit well, because it is basic of management accounting and it gives you the base basically, and further it is not having many topics to ponder with. So that gives you exposure to earn the 25% marks from this unit 1 at ease. That can be actually said. Okay, let's move to the towards the last topic, that is the advantages and limitations of management accounting. So first we will consider advantages, or you can say utilities of management accounting, because you have seen a statement many a places that during definition and objectives that its utility, the utility of management accounting makes it mandatory for the organizations, because as per the regulations we have seen that there are no statutory requirements as such for the development of management accounting in an organization, but it is being opted by the organizations because of its high utility. So let us see what advantages do we possess on this. There I have listed a few major advantages for you people. See, I have marked everything in bulleted form only, so that you can memorize the points and carry them over to your exam, because I just don't want you to give much of your time towards this, because in place of these theoretical topics you may put more of your time towards the practice of numericals from the next upcoming unit 2, 3 and 4. There you do have a lot of numericals actually. So it is better to give only few hours to this unit 1 and finish it off. After this video you are in a position to finish off your unit 1. Okay, let us begin with the advantages. Before beginning the advantages, let us summarize it what management accounting actually is. Again, management accounting basically, it analyzes and interprets the accounting information in order to meet the needs of the management to take the future decisions. So the foremost element of management accounting is that it helps you to take future decisions. What else? There were 2 3 points that we pondered upon, if you remember. This is the first basic point, that it helps in decision making. The other two are planning and controlling, that it helps you to plan for your future and to take the decisions, and beyond that it helps in controlling the organization. For that reason only sometimes the management accountants are called as controller of the organization. Okay, now let us see the advantages. First, it increases efficiency. How and why? It increases efficiency through the development of various channels through which the management accountants develop the information for the higher authorities, which further gives instructions to the lower authorities like the middle and the lower level of management to step out with a particular scenario. It increases profitability, obviously, in the sense that when an organization takes decisions for the future of the organization, they are very much keenly interested in enhancing the profitability. And when you are keeping a pace of the past historical data, present market situations, and you're performing the process of planning and controlling, so this all somewhere or other gives a deep impact towards your profitability, towards your visibility in the market. When you're visible in the market, this means that your product, your services are being identified as something important. So it enhances your profitability. Next, it simplifies the decision making. See, decision making is not at all difficult, but the wise decisions are difficult. As per the situations which are existing in the market, top management needs to take the decision. Here I'm talking about the general situation, not of the COVID situation. I'm just taking the general decisions that top managements are supposed to seek. I'm talking about taking into consideration the normal situations. Please take that in mind. Consider it in your while I'm explaining the things. So decision making is actually easy, but wise decisions are actually important, because they only would take your organization towards the top or may bring you down. So when management accountants use the information from the past, when they plan, when they perform other functions, they employ various techniques that we have discussed in the last video lecture, that actually simplifies the decision making process. Next is, it enables the movement of business monetary fund. You know that funds in a business are very, very important, and regulation of funds, keeping the turnover on, keeping the movement on, is very important for a business to maintain its cycle of business. And management accounting somewhere or other helps and enables the movement of business monetary fund. Then brings next important advantage that we have from management accounting is cost transparency. Cost transparency refers to the clarity of the costs, because you know that management accounting makes use of cost accounting as well as financial accounting and takes the decision. So when there are clarity in decisions regarding the costs, the further decisions would be taken in a wise manner. So cost transparency is again an advantage of management accounting, because whatsoever costs are obtained through cost accounting, they are further analyzed and further tools and techniques are applied on those costs, and then accordingly the decisions are taken specifically for the decisions for your selling price in the market and others. Then we do have flexibility and freedom. This flexibility is regarding that there are no statutory requirements, means that the reporting can be done as per the requirement of the top management or the management accountants, means it is not mandatory that yearly you need to publish your reports, or on yearly basis or monthly basis or weekly basis you need to prepare your particular books of accounts. It is as and when, as per the requirement of the organization, it is accordingly maintained. Next is that it assists in achieving the objectives. How? Every business has one or the other objective to meet upon, which has a very important objective of profitability, enhancing profits at a particular point of time. So this actually initiates that process. It actually kick-starts that process, that it helps in achieving the objects of the organization. Then we do have further next part as future predictions. Future predictions in the sense that because we are planning the past, we are considering the various options of the current situation. So we are able to predict the future in that situation. These predictions can be related to any business process, any important process, maybe a decision like make or buy. It can be a decision regarding expansion strategy. It can be a decision regarding whether you would get involved beyond the geographical boundaries of the organization, of the country, and you would like to go for exports, etc. That which are the options which are going to be positive for you. So it helps you to take future decisions, and it makes predictions for that. We do have advanced techniques and features here and out, like we do have marginal costing, we do have budgetary control and other techniques that you will be studying in the upcoming units in detail, which helps you somewhere or other to fix the selling price, to take the competitive advantageous decisions, where and how to stand up in the market. It increases the competitive abilities, and it helps you to compete with your firms, with the other firms in the industry. So this was the glimpse about the advantages of management accounting. Let us move towards limitations. Now from beginning I'm talking about that management accounting is this, management accounting is that it is helpful, even though it is not a statutory requirement, though it is actually in need at a very vast space. But we understand this very well, that it is actually a very important tool of management which helps in achieving various business goals. This is true, but it suffers from certain limitations as well. There are certain points where it lacks up. There are certain points where it does not meet the points, and it is even having certain limitations. Certain loopholes are there, certain drawbacks are there. Let us discuss one by one. See, whatever data you use in management accounting is based on historical past, because management accounting helps the management in taking decisions, but it picks its data from historic data, because we know that it picks its data from financial accounting and cost accounting. This means that we are utilizing the historical data only to make the future predictions. Here, that factor of economics that you always studied, that prices in the market are stable, somewhere or other some assumptions are there. Is it possible to keep the market prices stable, may it be of raw material or of finished goods or of your particular product in the market? Because historical data is based on the historical prices, and on the basis of that you're making future decisions. So this is actually a limitation, that accuracy and dependability on such data will leave the mark on the utility of the managerial decisions basically. So if the past data is not accurate, obviously the management decisions would not be wise and correct. Okay, next is the lack of wide knowledge. How and why this is a limitation, let us have a look. The management accountants should actually have a wide knowledge of not only the financial and cost accounting, but they need to have and possess the knowledge from the allied subjects also, like economics, management, taxation, statistical and mathematical techniques, etc. Why? Because lack of knowledge of these subjects on the part of the management accountant would limit the quality of the management accounting, because management accounting is more about exploring yourself as a developed organization. Next, that it is a complicated approach, because management accounting deals with a mass of data using various accounting and non-accounting subjects to take the decisions. But it is actually sometimes that management avoids this complicated and lengthy course of decision making, and they make decisions based on the intuition. That is actually the point. So it leads to unscientific approach of decision making, because you do have a bulk of data, complicated approach is there. Now, not a substitute of management. See, this is for sure. These mechanisms cannot replace the human beings. Management accounting only provides the information to the management for decision making, but it cannot actually substitute the management or the administration of the organization. It is a costly affair, because the installation of management accounting system in any organization requires wide network of management information system, MIS, that we call. Rules and regulations are need to be formulated. So this all requires heavy investment, and for that reason only somewhere or other small organizations may not be able to afford it. And even if they are able to afford it and establish the system, it is not feasible for them to work out in that, because it is designed in that manner that it works out with the vast network only. So for that reason it is a costly affair. We do have certain more limitations. Let us further have a look to them. I have marked developing stage as one of the limitations, because management accounting is a relatively recent development, and it is actually still evolving. It has not fully developed yet. So it limits the utility of the particular system to management in making the perfect and correct decisions. So ultimately it is the decision of the human resource only. Then we do face another limitation of lack of objectivity. Lack of objectivity, like the interpretation of information which is provided by the management accounting, may be influenced by a personal bias. It is not objective, because the interpreter who is working on it would tell upon the quality of the managerial decisions. He himself may affect that particular thing or not. I have marked one more disadvantage below. You can see biased interpretation, because it is like basically the personal viewpoint of the management accountants only, because basically it depends on the people who are interpreting it. Analysis would be same whosoever would done of the quality of the quantitative data, means whatsoever numerical data you are obtaining would be same, analysis would come out to be same, but its interpretation, the way you're presenting the data would be different. So there comes the lack of objectivity, and the second last disadvantage, that it may have biased interpretations. Then you have resistance from staff. In what sense? Let us have a look. The existing accounting and management staff may not welcome the introduction of this management accounting system, because this would actually laden them up with a lot of work and responsibilities. So for that reason they are not very much welcoming with such kind of advanced and technical things, because they feel outdated, they may be obsolete related to those particular products or particular specific techniques that we do have. Which point I'm left with? Based on manually maintained records. This is quite simple, because in that situation, because you know very well that financial accounting is totally manual, cost accounting is again manual, and management accounting is based on those two only. It picks up all its data from financial and cost accounting. So it is based on manually maintained records, can have errors. And if there is an error there out of any kind, management accounting would lead to faulty decisions. Okay, then not an ideal choice for small scale industries. I have just discussed that, because small scale industries are not able to have the setup for that expensive, that costly system, and even if they are able to afford it and maintain it, it is difficult for them to sustain it in a particular way. Okay, now hereby we complete our unit 1. Now let us check through certain way of quiz or so. I will be conducting more of quizzes while we have our online classes. It is just for your point of reference that at this point we are completed with our unit 1. So let us check that whether how much we have obtained out of this particular unit. See what would be the mechanism now. I will be reading out the statements. You should think out that the particular statement is true or false as per the information that you have obtained from me till now, and check out that how many answers you have got correct. So from there you can check out that how much, like if suppose 6 answers are correct out of 10, that would show that 60% you have obtained, because these statements are from just the understanding of the meaning and the terms that we have studied till now for the management accounting only. Okay, the first one that I have used here is that management accounting is a branch of accounting that produces information for managers within an organization. Now check out your point, check out your answer. You would give it a true or a false? Yes, it is true. Management accounting is a branch of accounting only that produces the information for managers within an organization. Now remember that particular characteristic, that it is not meant to be shared with the outsiders, means it is something, cost accounting information and management accounting information is something that is confidential for an organization, and you do not share that particular information with the outsiders. It is meant to be used and initialized within the organization. Okay, next statement. Management accounting is based on double entry system. Now take a quick glimpse. We know that financial accounting is purely double entry system. We do have debit for every credit. Then comes cost accounting. Cost accounting picks data from financial accounting but has certain different mechanisms, may or may not use double entry book system, because if we are drawing a process account, it is somewhat like a ledger account only, and you're using a double entry system. But while we are drawing cost sheet, there we do not have any debit or credit system. There out you just calculate the costs in the different divisions that we follow. But what about management accounting? Is it also based on double entry system or not? True or false? Give your answer. You need to be quick. Just within seconds you need to decide that whether it is true or false. Yes, it is false. Management accounting does not rely on double entry book system, because it relies on other financial tools. We perform ratio analysis, or we draw cash flow statements, or we draw trend percentages or so. We have other tools, but we do not rely on, it is not based on double entry system. Next statement. Management accounting accountant is also known as controller. Now tell me, this is quite easy. Yes, it is very true. Next is cost accounting is a part of management accounting. Now tell this one. Which is the widest concept? Financial accounting, cost accounting, or management accounting? Which is the widest of all three? Now remember that difference that we studied. Financial accounting data is used in cost accounting. Cost accounting and financial accounting data is further used in your management accounting. So can we call that cost accounting is a part of management accounting? Is it true or false? Yes, it is true. So cost accounting is a part of management accounting only, and of these three, management accounting is the widest concept. Okay, Then fifth one, management accountant must be a qualified chartered accountant or management accountant from ICAI, Institute of Chartered Accountants of India. Now tell me this one. Is that management accountant needs to be a qualified CA or MA only? We have many a times used the term managers. Managers make use of the information stated by the books of accounts. So from there only you get to know, it is quite possible that the person is a certified CA or an MA, but it is not necessary. I have used the term must, that management accountant must be a CA. No, it is not like that. So for the answer's sake, this statement is false, that it is not mandatory that a management accountant needs to be a certified CA or MA. It can be some experienced manager even. The stakeholders can be the members of from the board of directors even. It is not necessary that they are qualified CAs or MAs. Rest, it is necessary that they need to be experienced, need to be influential in their particular area to take those decisions and make use of the information from the past. Then next, sixth, management accounting is a branch of financial accounting. Tell me, this is easy. Fourth and sixth are complementary to each other. I just told you that management accounting is the widest. If it could have been written opposite, quite possible, but management accounting can never be a branch of financial accounting, because financial accounting is having a narrower scope as compared to management accounting. So this statement, sixth statement, is false. I have few more for you, then we will be covering this unit. Now here I have marked seventh statement. Small firms may find it difficult to afford a system of management accounting which is quite due to high cost of operations. Every one of you would have the answer very quickly. It is true. I have just discussed this in advantages and limitations. Next we have management accounting system cannot be installed without a proper system of cost accounting. Now tell me this one. Is it possible that without cost accounting can you have a management accounting system? Again, remember those differences. Financial accounting information is used in cost accounting, and cost accounting and financial accounting information is used in management accounting. So when you do not have the previous records, when you do not have the past records, when you are not making use of the information which has been recorded in the past, so how can you install a management accounting system? So ultimately this statement comes out to be true or false, because it is written cannot be installed. So it is a statement which is true, that you do need cost accounting for the installation of management accounting. So this eighth statement is true, that a management accounting system is not possible to be installed without a proper system of cost accounting. Then ninth, ratio analysis and funds flow statements are part of management accounting. I have used this many a times. It is quite easy, you know, it is true. Next and the last, main emphasis of management accounting is on cost ascertainment and cost control for maximization of profit. Here what we are saying, that management accounting emphasizes on two basic things: cost ascertainment and cost control. Is it so? Don't you think? No, just think of. Are these the basic functions of management accounting or cost accounting? Got it? The statement is false, because the functions that are mentioned here, cost ascertainment and cost control, are the main functions of cost accounting and not of management accounting. Management accounting has planning, controlling and decision making. These are the three main functions. The main emphasis of management accounting is on planning, controlling and decision making for future, and the functions mentioned here belongs to cost accounting. So this statement is a false statement. Thank you so much. Hereby I finish my unit 1, and thereby gives you an opportunity to prepare 25% of your syllabus. If you have any queries, you may write to me. Thank you. Take care. Bye.